Boy, go get me nail cutter. Get the converter and turn on you on the restless too. And go for me peanut in the cupboard. And when you go for the peanut, just take the key and just go downstairs and check the mailbox same time. What how are this? Bumbleclot at the tax people them. I wonder how much we owe them.
Hey guys, I'm back, and today we're going to be discussing, as you can see from my skit, taxes. I want to mention that all the information I'll be giving is only pertaining to Canada. I don't have information for other countries, but if you'd like me to do a video on a specific country, I have no problem. Just leave a comment with the country and I'll get to it as soon as possible. So, the first question is, who charges your income tax? Canada's federal, provincial, and territorial governments. Each of these governments set their own amount each year. So this means if there's a certain individual who makes over a certain amount, he's going to pay two separate taxes, one to the federal or one to the provincial or territory that he lives in. Now, even though each government sets its own rules and rates of taxation, they're all very similar. For example, each of them allow all individuals to report their own income. There are many different types of income that you're capable of being taxed on. Let's start with the list. Number 1, income earned from hourly employment. Number 2, income from your pension. Number 3, income earned from sales of commission. Number 4, income from lotteries and gambling. Number 5, income made from dividends paid from company shareholders. Number 6, income earned from tips and gratuities. Number 7, income from a sale of your home. Number 8, income earned through self-employment. Number 9, income of interest and saving. Number 10, gifts. Number 11, income for shares of a company. And number 12, income for old age securities, universal child tax benefit, and pensions. Now, I could go into detail about each individual forms of income, but it would take way too long. So I do suggest that if you need any more information on either one, you go visit your CRA website or you visit your local government website. It'll have all the information ready for you. The federal tax brackets and their rates. If you make less than $47,630 per year, you're going to pay a tax percentage of 15%. $47,630 to $95,259, you're going to pay a tax percentage of 20.5%. $95,259 to $147,667, you are going to pay a tax percentage of 26%. $147,667 to $210,371 is a tax bracket of 29%. Over $210,371, you're going to be in the tax bracket of 33%. Now, that is simply your federal tax bracket. Your provincial can vary in any province that you're in. Specifically for Ontario, they are going to add to our first $43,736 5% provincial taxable income, 9% on 43,000 plus, 11.16% on 62,000 plus, 12% on 70,000 plus, and 13.16% on over $200,000. So, what does this mean? For somebody who's going to make over $200,000 in taxable income for a year, this means the government is going to take 48% of that money every single year. Now that's a lot of money when you think about it. That means if you make $1 million, the government is technically entitled to about $500,000. That's a lot of money. This is why I have to stress the importance of reporting your taxable income. 7 years, the government is capable of taking all these years of you not reporting and adding it into one big lump sum. And what will they do? They will garnish wages, garnish income taxes, and do anything in their power to ensure that they get their money. As a Forex trader, if I'm making over $200,000 per year of investment income, I'm capable of falling into possibly a different tax bracket. That does not include all the things I'm capable of writing off in order to get my tax breaks. For regular people, you want to ensure that you are reporting any taxable income just for your own well-being 7 years down the line. Like I said, you don't want the tax man to come and hit you with a big bill that you're not going to be able to pay. since we've covered the different forms of income, I would like to dive deeper into the form of income that I specifically want to teach you guys how to claim, and that's investment income. First, you'll need to determine whether you are an investor or a day trader. It all comes down to how often you trade, how long you hold your equities, and overall the amount of time you actually spend trading. If you buy and sell equities as an investment, you're an investor and should report any profits or losses as a capital account. Determining whether you're an investor or a day trader will make a significant impact on the amount of taxes you pay come tax time. If you're an investor, this means that you're making infrequent trades and you'll treat any profits as a capital gain. 50% of the gains are taxed at a marginal tax rate. For day traders, any profits and losses are treated as business income, not capital gains. As a result, you can't use 50% capital gains rate on any profits. Instead, 100% of all profits are taxed at the current tax rate. At the same time, 100% of any losses are also deductible too. That can be applied to other sources of income as well. The CRA will not accept any type of deductions without receipts. So you could write off purchases such as computers or anything pertaining to your day trading. As a day trader, the CRA expects you to declare the taxes on your earnings. In addition to keeping track of how much you make or lose, you need to keep detailed records of the instrument, the purchase and the sale date, the price, the size, entry, and exit point. Fortunately, most brokers that we day trade with will record every single one of these things for you. How do you avoid paying lots of taxes? Well, technically, if the money is sitting in your investment account, that doesn't mean the CRA or the government knows how much you have. What does this mean? Be mindful. Take a certain amount of money out per year once you get to a certain level in your Forex account. Let's say you build a $50,000 account to about $500,000. Only take out $50,000 per year. That will leave you in a tax bracket of $50,000 per year, and that way you will minimize the amount that you owe the tax man, and you could still live a quality of life on $50,000 per year, because mind you, this is what somebody would go to work for an entire year, making in Canada, let's say about $41 an hour. Alright guys, now that I've covered the basis of reporting your taxable Forex income and for regular people who are just going day to day about their business, I appreciate you for tuning into the video, and for the next video I have in store a little bit more things geared towards Forex, but also, like I said, I like to make it as round or well-rounded as possible, and I want everything to be as relatable to regular people as it is to people who are trading Forex. Again, thank you, and if you haven't yet, make sure you like, comment, and subscribe, and stay tuned for the next video.